What's up, guys? Welcome back. It is once again a new video, and in this video I will be going into the details of the trade that I took last week that has accounted for like 23 RR minus 1 RR because I took an L prior to that winning trade, and in my opinion it doesn't get mentioned well enough, is that taking L's to some extent is probably more important than winning, right? Because I think you know that we don't really influence the markets, right? And what I actually really like about the markets is that they can humble us in any time, right? And whenever we lose, we are getting more motivated to win. We are getting more motivated to study harder, to work harder in order to succeed, right? And there is nowhere, there is no way you're going to be winning without losing, no success without failures, right? So this was the perfect example when I had uh, taken an L, but then I caught a great trade that has resulted, as I said, for 23 RR. Okay, and this trade was actually based on 4 hour and 15 minute only, of course, plus 1 minute and 5 second confluence, but it wasn't really a textbook setup based on the daily narrative. Okay, so we did have daily bearish, right? But we have started the retracement phase on daily, which means that the buys were favorable, right? That means that we didn't have the time frames aligned with each other, and nevertheless, it doesn't mean that we cannot take pro for our trend contra daily trades. Okay, so the plan was that we had this 4 hour change of character, right? So we have swept the high, we have then swept the low. This has changed the order flow to bearish. So our next goal was actually to find a good looking supply. And in this case, I found one on the 10 minutes, because we had news at this point, and as you can see, we have this very big candle on 15 minutes. 15-minute POI looks like that, and in this case, what I don't really like about this POI is that whenever price comes into that POI, right, we are not sure what we are going to be looking for, as the range is very big, right? And if we are going to be looking for 1 minute change of character, right, we can have multiple 1 minute change of characters, meaning that we can take a fake change of character and then get invalidated or liquidated. Therefore, I refined it to 10 minutes, but still, as I've said, as we were daily in a retracement phase, which is bullish, right? That meant that on 4 hours we were yet in the discount zone. Therefore, I needed some extra confluence, and that extra confluence was to see 15-minute change of character, just to show ourselves that 15 minutes time frame is going to be bearish. And as you can see, we have this 15-minute change of character here, swept the low, swept the high, plus we have then 15-minute substructural break right here. And the next step that I've taken is to mark out the last upside range before the expansion to the downside that has broken 15 minutes to the downside. Plus we had these highs as the form of inducement. So yeah, it was the plan. And then whenever we, of course, hit our 15-minute range, I want to see 1 minute change of character. And then whenever we do that, you mark out the 1 minute POI, you look for the liquidity concepts. And then whenever price hits your 1 minute POI, you get to the time frames like 5 or 15 seconds for the confluence. Okay, so as you can see, the price then went up. We have used this liquidity to push the price to the upside to fill this liquidity void, and then in this case we have hit our supply, and this is the great time to go to the 1 minute time frame. And yeah, Here we have, and in this case, it is something very important because you may firstly, initially, actually, say that our change of character has happened a bit earlier, somewhere here, and I don't know where we're here, okay? But this is not the case, or at least partially it is the case, partially not, because we have a valid shock to the upside. So this is the high that got, swept. So the half of chalk is right, but the second half is wrong because we don't have a clear low for us to sweep and to classify that we have actually swept the low that has swept the high. Therefore, I have opted out for sweeping this high and sweeping this low because this low has been definitely a clear low, plus it has been the low that has swept this high. And once again, first of all, we have this 10-minute refined or 15-minute refined range, right? We can say that this double wick tells us a lot about the fact that BFIs are actually interested in holding that level. Plus, what we have this upside expansion, and we have this downside range. This downside range is our demand range that we're going to be looking for reaction, right? We want this demand range to react and then ultimately to fail, because that will give us the understanding that we had an interaction between buyers and sellers, and whoever comes out on top, in our case, ideally we want sellers to come out on top because that's the anticipation, right? It means that we are going to be selling, right? As you can see, we have actually not only reacted, we have actually took out the sell. So that gave us even more confidence for us to sell, because we have cleared the liquidity and we had a great wick here, as you can see, which was the supply that I marked out. And in this case, it was the decisional POI, and that's why I was looking to sell from there. But as you can see, I got liquidated, and it turns out it was a great inducement for our extreme POI, refined POI. And once again, in both these cases, we will go down on 5 seconds and look for 5-second confluence, which is liquidation mitigation, V-shaped recovery, chalk and flip. Nothing more, nothing new. Still remains the same up to this date. So without further ado, let's replay the price to here, right? And then go in 5 seconds. I'm not doing this as if it was real time because it will take me ages then, and I don't really want to have a video for like 40 minutes as I used to have. Okay, so the first example, right? We have broken the demand. We have 1 minute change of character, and this is what we have: 1 minute refined POI that has swept liquidity. On 5 seconds, we of course have these highs, right, that we can use as inducement. And plus we have all these runs on liquidity, which means that we have confluence number 1 in place, liquidation done. Next, mitigation. Well, we have come into the POI, we have mitigated, so it's done. V-shaped recovery. Well, we don't have necessarily a fast V-shaped recovery, which may be the case why this trade has failed, because we have a great and very impulsive way to the POI, but we don't really have a very impulsive way out of the POI until here. Okay, so that may be the case why this trade has failed, but nevertheless, we have this demand range that we are reacting to multiple times, and then we ultimately break it. And in this case, what I went and did is I traded, it's not actually right, I have sold right away as soon as we got into the demand range, and the stop loss was a bit higher, so it was like that. And as you can see, the price didn't really go into my direction for much. It just swept me out. And then at this point, I was actually thinking at this point, right? as soon as we had this leg to the downside, I was thinking that we may as well get another entry somewhere there, but then we didn't really break that low, which means that this low has held, therefore demand wasn't really violated. That means that supply is going to get targeted now, therefore we may as well go higher and use these highs as inducement for our extreme POI. Okay, so if we go to the extreme POI, right, we have a very good example here, a better one to be honest. So what we have here, we have a little accumulation of liquidity. So as you can see, whenever we have this kind of price action, we will always kind of move to the downside prior to that POI, right? And that is going to be only done for the purpose of sweeping it right away. Okay, that is why we have done that, and then we have impulsively swept it, right? So liquidation done, mitigation, well, we have mitigated, we have come up into this POI, done. V-shaped recovery, the same thing. As you can see, 3 done. So I have a lot of people DMing me with the questions that they didn't really get the idea about the candle rule for V-shaped recovery. So what I meant is that if we have these 6 candles, right? So 3 into the POI and 3 out of the POI, right? Then it means that V-shaped recovery that we are going to be looking for is that we will want, as you can see in this case, we will want 1, 2, 3, 1, 2, 3. If these 3 are going to be longer, right, then these 3, it's a V-shaped recovery that we are looking for, because it shows us the aggression that we want to see. And sometimes you do that with 2, sometimes with 3. Like in my case, I do it with both. It's just kind of automatic at this point. And then what else? Chalk and flip, right? In this case, we had we didn't really have a clear demand. We had a reaction to the demand with this wick from this point, right? And we had our chalk, well, obviously here. Okay, so everything is great. The only thing is that in this case, I have refined it to this demand, to this supply story, but in real time, I didn't look at it that way. I have looked at it as something more like that, more so 25% entry. And of course, the stop loss was fixed, 2 pips stop loss, if I'm not mistaken. Let me actually see. Inputs, no, 15 ticks, which is 1.5 pips. And if we talk about the partials, right, the first partials would have been at the first 1 minute wick low. So in this case, 1 minute wick low is going to be here. So here we take first partials, and then based on 15 minutes, we have our final take profit is here, because that's our 15-minute wick low. Okay, but turns out that we had this done right, but I didn't really take 4 hour into the consideration. And in this case, we could have targeted this low, because that was low week on 4 hours, and we had unmitigated demand underneath it, and that is why price went, and as you can see, melted for actually more than 20 RR. Let's see for how many. So the low is at 73 RR. Now, yes, I could have held, but I didn't. Okay, that's not the trade. Okay, this one. It's not 73. I'm sorry. It's actually 88. Okay, cool. It could have accounted for 88 RR, but I got only 25% of it. And I'm fine with that because I still think that the winning trade, no matter what RR is better than a losing trade in terms of profit. But the loss that I have taken prior to the winning trade is actually really important to me as well. So I think and I hope that this trade has been very helpful for you. And hopefully, I will talk to you really soon. And hopefully, you will have a great trading week. And